Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Interface Inc.'s latest report, and let's just say their earnings release has a few surprises, some good, some maybe not so good. We'll break down what it all means. This is a report from Interface Incorporated filed on May 2, 2025. It's called a Form 8K, which is basically a current report companies use to tell investors about important events. The main thing here is that Interface is sharing how they did in the first 3 months of 2025. We're going to dig into the numbers, but they also talk about some non-standard ways of measuring their performance. These are called non-GAAP measures. GAAP is just the standard way of doing accounting. Companies sometimes use other ways to show their numbers that they think are more useful, but they can be a bit tricky because they're not always the same from one company to another. It's like everyone baking a cake but using slightly different recipes. These measures should not be used as a substitute for or considered superior to GAAP financial measures. They're using terms such as adjusted earnings per share and adjusted net income. These adjusted figures take out certain one-time costs like those from buying another company called Nora, some restructuring, which basically means changing how their business is organized, and unfortunately a cyber event, which sounds like they got hacked. They also talk about currency neutral sales, which means they are trying to show how sales are doing without the ups and downs of different countries' money values changing. This helps to see if they are actually selling more stuff, or if it just looks that way because the dollar got stronger or weaker. The report mentions a cyber event impact, which sounds serious. It's a reminder that all companies, even flooring companies, are at risk from hackers, and these attacks can cost a lot of money and interrupt business. Moving on, the company has a slide presentation for investors. This is pretty normal. Companies want to get their story out and explain the numbers in a way that makes sense, or at least in a way that they want investors to see it. The company included their earnings press release and slide presentation. These are the documents where you'll find all the detailed numbers and explanations we've been talking about. Tig, now let's step back and think about what all this means. Interface is trying to show investors that underneath some unusual events like acquisitions and cyber attacks, their business is doing okay. But we need to look closely at those adjusted numbers. Are they really giving us a clearer picture, or are they hiding something? The cyber event is a real concern, and it shows that companies need to invest in security to protect themselves. Is this company heading in the right direction? Well, it depends. If they can keep growing sales and manage costs, especially those one-time charges, they could do well. But if those one-time costs keep happening, that's a red flag. There's always the risk that the economy could slow down. People might not buy as much flooring if they are worried about their jobs. Also, competition is always tough. Interface has to keep coming up with new designs and ways to make flooring to stay ahead. Interface is trying to navigate a changing world with acquisitions, cyber threats, and global markets. The question is whether they can keep it all together and keep growing. Thanks for watching Corporate Decoder. Do not forget to like, comment, and subscribe for more breakdowns of the world of business.